How does the credit card billing cycle really work? Now, today we are diving deep into the billing cycle and how it really works and affect your money or your spending. So stay tuned as we discover and dive deep into this subject. No confusion, no complication, just the truth about how you are billed anytime you use your credit card. Welcome back to Family Finance Made Easy podcast, the podcast where we break down money topics into simple, practical ways that every family can use. I am your host. My name is Patience Naa Odarkai Adjei, a financial professional here to help you make some smart financial decisions. Now, if you have not subscribed to our channel, please subscribe to our YouTube channel, Family Finance Made Easy. But in today's episode, we are continuing the new season on credit cards, and today we are looking into the billing cycle and how it works. So let's get started. Now, what is a credit card? Yeah, I already explained this in the episode 1. So if you have not watched the episode 1, please click on the episode 1 up here. It will explain a little bit more detail on what credit card is all about. First of all, you have to understand that it is a temporary loan, a short-term loan that you are taking from the bank that you promise to pay them back, and they promise to pay for the item that you are purchasing. Now, let's talk about the billing cycle. Now, this is where it gets confusing. Now, the billing cycle is usually within 30 days. And during these 30 days, you get to use your card to make purchases, swipe it here and there. And the bank will also be tracking every time you swipe the card. They will be tracking it. And at the end of the cycle, you get a statement. And that statement is going to have your total balance that you spend, your minimum payment amount that you can pay every single month, and your due date. It has a whole lot more details on it. Now, let's look at the example on the screen. Now, this is an example of a credit card statement, not looking exactly like any kind of bank statement, but it has all the information that your credit card statement would have on it. When you look at the top, it has the account holder's name on it. So you're going to see the account holder's name. You're also going to see the statement period. In this case, January 1st to January 30th of 2026. You are also going to see the due date. In this case, the due date is February 20th. Then you're going to see the account summary, the whole summary of what you used the card for the whole month. That is previous balance, payment that they've received, new purchases that you've made, interest that you've been charged, new balance, and then your minimum payment due. Now, you will also see the transaction activities, and that is going to show what you actually use the money to purchase, what you actually use your card for, like groceries, gas, Amazon purchase, those who like to order stuff. These are some of the things that it will show on your credit card statement. All right, now let's talk about the grace period. Personally, this is my favorite part about the credit cards and how it works. The grace period, I'm going to teach you how you can safely borrow money from the bank for almost 2 months without any interest at all. Now, let's get to it. If you make purchase, you have until your due date to pay the whole amount. If you do not pay the whole amount, that is when the interest gets started. Now, let me show you this trick. Now, looking at the statement date, the statement starts from January 1st to January 30th of 2026, but the due date is February 20th. So the gap between January 30th and February 20th is your grace period. And so if you are able to clear all your balance and owe absolutely nothing by January 1st, you can actually make a purchase on January 1st, which is the beginning of your statement date. Make a purchase on that date And you have all the way up to February 20th to make that payment. So, with this grace period, that gives you almost 2 months that you can actually safely borrow money from the bank. During this period, you will not be charged interest because one, your statement date ended on January 30th, and two, you have up to February 20th, and that is your due date. So with this safe period, you are able to borrow money if you are sure that by February 20th you can get the amount to pay for it. Then you can safely borrow money around this period for almost 2 months without having to pay interest on it. Please be warned, if you want to try this out, make sure that you are able to pay the full balance by the February 20th, or else interest starts accumulating when you miss that due date. Also be warned that if you still had balance before January 1st, this idea is not going to work because you've already activated your interest mode. So it really has to be that you have paid all your balance by January 1st and you actually owe absolutely nothing with the credit card. Then this grace period thing can actually work, where you will actually borrow money for almost 2 months before you are getting charged interest. Now, a lot of times people get these credit card offers in the mail and then they see a huge APR on it. Now, what exactly is this APR? Now, I'm going to talk a little bit about it, but we will dive deep into it in episodes to come. And so if you have not subscribed to our channel, please subscribe to our YouTube channel, the Adjei's Family Ministry, and also hit the notification bell so you don't miss any of the episodes. Also follow me on TikTok, Instagram, and Facebook as well. So stay tuned and don't miss any of these episodes. Now, what exactly is this APR? This is the annual percent rate. Okay, now this annual percent rate is actually showing you how much you are going to get charged if you don't pay your full balance. And most of the time, the percentage is between 18 to 30%. Some banks are charging more than 30% on purchases that you make. And so it is very important for you to understand. Like I said, I will dive a little more deep into this APR in episodes to come. So make sure you're subscribing to the page. Another thing I want to mention here is credit limitation and utilization. Now, every credit card has a limit that you should spend. Okay, they give you a limit. Just because it's available for you to spend doesn't mean you should spend it all. You should really keep your spending below 30%. At best is 10%. Remember, everything that you do with your credit card have a lot to do with your credit score, and that's also going to be discussed in episode to come. So again, like I said, make sure you are actually following my TikTok page or actually subscribing to our YouTube channel. Now, my suggestion on how to actually use your credit card the right way: please treat your credit card like it's actual real cash. If you actually don't have the cash, or you don't anticipate to actually have the cash, then please don't use it above your means. Only spend what you already have or you know you can actually pay off. Pay full balance every single month and never rely on minimum payments, okay? Don't rely on minimum payments. It's not going to help you. It is actually going to keep you in debt longer, and you actually end up paying more than you actually borrowed. And track every spending. Know where your money is going so that you can actually know how to manage it. Thank you so much for joining me on today's episode. My name once again is Patience Naa Odarkai Adjei, a financial professional. I love talking about money because numbers don't lie. Until the next episode, make sure you are spending your money wisely and you are actually not putting yourself into credit card debts.